Good afternoon, everyone, and welcome back to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, it's been a very volatile session, and it seems like a bit of fatigue has set in among the bulls after 3 or 4 sessions of very, very strong gains that we have seen in the market, Santo. If you look at the Nifty and Sensex, they had started off the day deep in the red territory, then recovered most of those losses, but again are dilly-dallying around the flat line at this point of time. The main story, of course, today is in the rupee market. The rupee opened the day at record lows, then surged, made a massive comeback, and is currently sitting around 82.35, 82.40 levels after what a lot of dealers say has been an intervention from the RBI side by selling off a lot of dollars. Apart from that, the mid-cap names, they are taking a beating at this point of time. The mid-cap Nifty, mid-cap 100 index, that is the one index that is at this point of time, Santo, underperforming. And it looks like some traders are choosing to book profits ahead of Diwali. Well, maybe because they have to do a lot of shopping, probably.
Nicely put, CJ. But clearly the market is struggling at this point in time for direction, because there seems to be a clear absence of buying support at higher levels. That said, we've seen huge short positions get built up in some of the names that reported their quarterly earnings yesterday. So, AU Small Finance Bank, IndusInd Bank, surprisingly, are some of the stocks, some of the futures in which short positions are being built up. ABB is the other stock in which has seen a build up of short positions. So, clearly CJ, meeting expectations doesn't seem to be good enough anymore.
Yeah, I mean, I think I was just reading out a tweet earlier before coming online, and it said that 80% of the stocks that have reported earnings so far, Santo, have actually seen their share price fall, no matter what the earnings was, and almost 200 companies have already reported their Q2 earnings so far for the September quarter. So that is some saying that market is just not convinced at this point of time. It's demanding a lot more.
Yeah, more than convinced. I think, CJ, at this point in time, it's very evident that valuations seem to capture most of the positives and
Perhaps, and we have not seen as many beats, as many earning surprises. A lot of the earnings have largely been in line or have marginally beaten street's expectations. So therefore, maybe we are not seeing any sort of a surprise reaction from the market.
You can never please the market. You do well in one quarter, they'll set the bar even
absolutely,
higher.
Absolutely. Market always demands more. That said, a lot of stocks were buzzing in trade today. And starting off with from the asset management space, Santo.
Yes, this has been one of the sectors that I've always been bullish on, despite the fact that the stocks have not really been performing. But CJ, it's a bit of a, what is your favorite theory, reversion to mean. That's something that I'm playing at this point in time.
Right.
So HDFC AMC's latest quarterly numbers were very much on expected lines, but interestingly, unlike other stocks which have taken a beating even after reporting numbers on expected lines, HDFC stock has remained steady, which indicates that probably now the market feels this is roughly a fair price for the stock. You saw it falling to about 1700 levels a couple of months back, but since then it's been steadily crawling higher. Now, one of the positives for HDFC is that its share in systematic investment plans that has steadily been inching up higher to about 11%, and the reason for that is that there has been improvements in the performance of its equity schemes as well. So clearly the fund finally seems to be turning a corner. That aside, the impending merger of HDFC with HDFC Bank is also being viewed as a positive for HDFC AMC because of the stronger distribution channel. Now, one of the things is that with most other bank sponsored AMCs, the kind of support that they are getting from their parent company, it's not been the same in the case of HDFC Bank. At least some like SBI don't even sell other mutual fund schemes. So that's the kind of numbers that we are talking about here. And thirdly, there's also been an overhang, CJ, of this steady sale of shares by its joint venture partner Standard Life Aberdeen. But now that the joint venture partner stake has reached about 10%, it cannot sell further without prior approvals. So that's a long drawn process. So this bits of blocks of shares that were coming into the market, that will temporarily stop, and that should give some support to the stock price, CJ. And CLSA is among the brokerages which is positive on HDFC Asset Management.
Santo, I think for me, yes, the earnings were not bad, but they were not spectacular either. They were largely in line with what the market was hoping for. And I think that is why probably for me, the upside from here would be a little limited because of the lack of surprise or positive surprise, if I may call it, in terms of the earnings performance. Apart from that, I think a lot of the re-rating in the stock now is contingent largely upon whether or not HDFC AMC is able to claw back a lot of the market share that it has lost over the past 3 to 4 years. Remember, at one point of time, HDFC was the number one AMC out there. Then it was number 2 after being taken over by SBIMF. At this point of time, it seems like it's trying to have a duel with ICICI Prudential in terms of that number 2 and number 3 slot. So for me, yes, there has been improvement sequentially in terms of market share, especially with respect to SIP and the equity AUM. But going ahead, market would demand a faster an acceleration in market share gains so as to ensure that the stock continues to get re-rated going ahead. Well, before I move on to my next stock, guys, if you have any sort of stocks that you need us to talk about, you can always utilize the hashtag AskMC and post it on the comment section, and we will try to take it up as much is possible within the time of the show. That's it, Sandra. Moving on, the second stock on our radar today is Clean Science Technologies. Now, the company's earnings just came out before we were going live on air, and the stock has really reacted very well to those second quarter numbers. If you look at the numbers for net profit, higher by about 27% on a year-on-year basis. Sales have risen 62% on a year-on-year basis, and EBITDA, which has been probably the most heartening part of this earnings performance, and the EBITDA or operating profit has risen by about 42% on a year-on-year basis. Of course, the only dampener has been the fact that margins have contracted from the year-ago quarter, but I think probably we have reached a trough as far as the margin contraction is concerned, given the fact that a lot of the key input prices have declined on a sequential basis, and therefore going ahead into the third quarter and fourth quarter, you could see some bit of revival as far as margins are concerned.
Well, a good comeback in terms of earnings over the last couple of quarters, CJ, but again, it's a little puzzling. The stock peaked out at around 2600 rupees levels, and now it's at what, 1600 or 1700 rupees. That's a steep correction, and this even before you saw the spectacular turnaround in its March quarter earnings, when the top line rose quite sharply. So it's a little confusing. That's how I would put it. Plenty of positives, though. Good balance sheet at this point in time.
I think
the company has been able to maintain margins.
This is another, one of those thematic stories. Of course, Clean Sciences, has been pegged as one of those companies which will benefit a lot from the shift to greener, energy sources and the climate change economy that everybody has been talking about. I think when the company's IPO came in, I think that was the buzz around the stock, and clearly, if you look at it from the IPO perspective, the stock has been a multi-bagger so far for a lot of investors. And I think going ahead, a lot will now depend on the execution of earnings, and if the company can continue to perform like this, of course, you would also want to see the margin to also improve. I think that there is a possibility that this stock could continue to re-rate and be a very long-term portfolio pick for a lot of investors out there. Well, that's it. We promised you a special session today with respect to some of the themes that could be worth looking out for Santo in Samvat 2079. And today joining us is Amit Doshi. He's a co-fund manager with CARE PMS. And Amit, welcome to the show.
Hi, thanks CJ, and thanks Santo for welcoming me.
Thank you, Amit. Thank you so much for joining in. And of course, getting into Samvat 2079, one has to also look at the past, the past 1 year performance. And if you look at it from an absolute sense, Amit, it has not been a very great year, given the fact that the benchmark indices have only given you about a negative about 1 to 2% sort of returns. But if you look at it in context of what has happened in the global economy, clearly we have been ranked outperformers globally. If you look at some of the sectoral themes that have been doing quite well this year, Amit, they were energy, FMCG, and PSU stocks. I mean, PSU stocks have come back to life like as if this is 2008. What is your take? Do you think that this outperformance will continue going ahead?
I think beyond a point, decoupling would be difficult because, of course, last 1 year has been really good in terms of domestic flows, which were very significant after continuous 2 year of spectacular performance by not only India but global stock market. And going forward with this kind of things that are happening globally, as we all know, whether it's US, UK, China, and all other issues cropping around. I think we as an India, as an exporting country, services being one of our core, IT, which is driven primarily by US, I think there will be a bit of subduedness to that extent. So yes, domestic demography is extremely strong, so domestic businesses will do very well. But as an economy, as an stock market, I think beyond the point, it will be difficult to maintain that outperformance that we saw for last 1 year.
Well, Amit, we are about a couple of weeks into the second quarter earnings season. What's your broad assessment based on the numbers that have come in so far? Anything that caught your attention in terms of either sector or stocks?
I think broadly the numbers so far, of course, apart from IT, a couple of cement stocks and some stock specific movement, broadly I think results are probably in line of expectation, what street was expecting. And I think the theme here will be more of going forward because, what's going to happen now, whether US, UK, how things move along, will something which will do impact us. So broadly, I would say result-wise, things are good so far as second quarter is concerned, and it is in line with expectation. In fact, in stocks like Infosys and all, obviously had a good surprise in terms of strong upliftment of their revenue and profitability guidance. But yes, I think broadly in line, and now going ahead, let's see how things move on.
Well, Amit, we wanted to have you on the show to talk about some of the themes that could excite, investors over the next year, especially in Samvat 2079. What is your take? I mean, what are the 2-3 top, sectoral ideas that you're looking at this point of time that you really feel could be among the outperformers as far as the market is concerned?
Yeah, definitely. So I think the one thing that you just spoke about is the PSU. Right, and especially the defense theme that is being currently under huge discussion, the defense expo already going on and catching headlines everywhere. But that's something which is not just really the headlines, but that's really something which government is serious enough to get this business at its best. And that's something which we believe PSU not only, of course, last 6 months PSU banks did very well. PSU overall, the re-rating kind of thing is happening. And I think going forward, wherever this strong government emphasis is there, those PSU will likely to re-rate. So to answer, a question which we just discussed initially also, PSU will be there. And in terms of theme, PSU defense is likely to really very well because that's more of a structural theme. That's not a momentum theme, which is likely to stay on for not 1 year, but probably 2, 3, 4 years or so. So that's one. Second, yeah, sorry.
No, sorry. Please carry on, Amit.
Yeah. So second theme I would like to believe is pharma. With this global uncertainty around the world, pharma is likely to do well, and a lot of issues that were cropping around. Of course, COVID was a year where pharma performed very well, but past 1.5 year, pharma has extremely lagged the entire cycle, and rightly so because of a lot of issues on the price erosion in the US side, supply chain, of API, China shutdown, etc. So those had hampered the pharma sector. But now I think those things are moving around, so tailwinds are there in that sector, and apart from it, it has not done well in terms of price. So valuation wise, it gives more comfort, and with this global uncertainty things around, they are likely to do a consistent performance. So I believe pharma could be another sector which will likely to do well over next.
Well, Amit, your bullishness on pharma makes me, fear that you are being a little coy about our prospects next year, given that probably you're looking at pharma as more of a defensive play, given that the overall growth of the sector has not been, something to really write home about. although a lot of people within the pharma space have been talking up stocks which have more India focus or domestic focus than export focus or focus in the US market. So will you be also distinguishing between within the pharma space as to which company to bet on, which not to?
Absolutely, absolutely. So, in fact, wherever the times are tough, the players or the pharma companies which are very strong are likely to consolidate and they are likely to re-rate further. So, definitely, domestic focused businesses will do better, and same will continue not only for pharma but across the businesses. Domestic businesses will do quite good during next 1 year because the domestic demography of India is extremely strong. The demand is very good, and that's something which will definitely drive the show for next 1 year.
Well, Amit, any other themes that you're watching out for apart from PSU defense and pharma?
Another could be, auto ancillary. Auto anc is something that we believe will be a good theme. And again, there could, well, because that sector is very big, very large. So, whether two-wheeler, three-wheeler, passenger vehicle, commercial vehicle, export, domestic. So that will be more like a stock specific. But yeah, auto anc as a theme, I think as a sector should do well after 2-3 years of a lot of these issues on the semiconductor and all. Now things shaping up well, commodity price cooling off. So those things would definitely be work better in auto anc business.
Well, Amit, you spoke about PSU defense stocks. Now, these stocks, most of them have run up fairly quite a bit. So, how does an investor approach this space, given that if you see most of them have almost risen, what, 60-70% in 1 year. So, do they look reasonably valued at these levels?
Yeah, in fact, Santo, one of our viewers, Abhishek Ranjan, also had a question with respect to Bharat Dynamics. And his question is basically what you have been talking about. Should one be booking profit, at this point of time, given the gains that we have seen, or should one wait for the, the upcoming earnings season and continue to hold on to those gains? So I think this is something, Amit, that a lot of people have been thinking about, especially with respect to the PSU defense space.
Right. So I'll take one by one. First, what about stocks have run up extremely 60-70%, and whether valuations are still more reasonable? The answer is clearly yes, because PSU in general always had been good balance sheet, good payouts. Otherwise growth was decent growth. Still, they were always valued extremely low compared to all other their peers in similar kind of numbers on the balance sheet or the P&L. But now that kind of has got traction. But despite that, since this is a more of a structural theme and not just a temporary 1 year story, or there is some specific order that has come up, it's not that. It's something which is a more of a 3 to 5 year thing. Then this is likely to re-rate further as the number crop up. Now, to answer the query of one of your viewers asking about whether book profits or so I think I would say the perspective should be two pronged. Somebody who is a short-term investor or somebody who is more of a risk-averse guy who would want to capture some profit at home, he should do it. There is no doubt about it. He'll definitely this is a theme for next 3 to 5 years. So he will get opportunity to keep on adding funds as and when the opportunity come in terms of price correction, etc. And for a long-term investor, I think he can always buy on a SIP, so to say, basis in these companies of PSU defense, which are likely to do well.
Well, Amit, before we let you go, I mean, of course, everybody talks about what to buy and what to hold, but nobody talks about what to sell or probably what to avoid in the market. So, any one theme or sector that you would be probably sidestepping at this point of time, at least for the next 1 year perspective, 1 to 2 year perspective?
So, IT has obviously corrected quite a bit. So, on the valuation front, to some extent, it gives comfort. But I think for next 3 or maybe even 4 quarters, the clarity is not much there in terms of growth triggers. So that's something one which can be cautioned about, but valuation wise it's still comfortable. And second, things that were to avoid, I would say that this typical 2-year bull run that we saw, and a lot of these IPO new age stocks that had come in, had a significant high valuation. Of course, now they are all down by 30, 40, 50, 70%, etc. But I would still want to say that, still the time that clarity on the numbers, profitability is not there, it's better to be away from such stocks, because those stocks become fancy and frenzy during this period, and may not give return for a longer period of time.
Well,
thank
Amit,
you. Yeah.
Amit, before we let you go, CJ here is a very big fan of all these new themes and keeps batting for them from time to time. So maybe he could do well to take your advice, perhaps.
Oh, come on, Santo. I mean, of course, Amit's view is in his place and mine is on mine. And of course, our viewers are intelligent enough to dissect, which ones they want to follow and which ones they want to probably throw in the garbage bin.
Well, and let's quickly take a look at the market at this point. Benchmark indices are still just about flatlining. CJ, it looks like the bulls are beginning to run out of steam.
Yeah, I mean, Santo, clearly, I think there is a little bit of impatience creeping in among the bulls, and you can see that, in the performance of the benchmark indices. The Nifty is about higher by about only 0.4%. So maybe we could probably be able to sustain the long streak of gains that we have seen, almost 4 days of gains that we have seen in the market. Sensex is higher by about 0.2%. I think if we can bring up the charts for Nifty Mid Cap 100 and Nifty Small Cap 100, I think there we could see a little bit of pain probably. Yeah, Nifty Mid Cap, although it has recovered a little bit from the day's low, but it's still looking like we are going to have a negative closing on the Nifty Mid Cap index.
Well, and with that, let's quickly take a look at the key things to keep an eye out for tomorrow.
Well, Santo, earnings, of course, big earnings are coming out. Almost 25 to 30% of the index's weight is going to be announcing its earnings tomorrow, and the biggest of them all, of course, will be Reliance Industries, HUL, which is Hindustan Unilever, JSW Steel, and Bajaj Finserv. So these will be the four major earnings to keep an eye out on. Apart from that, from an economic data point of view, keep an eye out on the US weekly jobless claims data that will come out or will be released later in the evening. Apart from that, lastly, keep an eye out on some of the Federal Reserve members who will be speaking today. There are almost 3 Fed members who are scheduled to speak later in the evening, and what sort of dialogue they have in terms of inflation, in terms of the economic data that has recently come out in the US, and the interest rate outlook. I think that would be pretty key as far as Friday's session and the setup for tomorrow is concerned, Santo.
Well, and with that, we wrap up this edition of Market with Santo and CJ. Hope you enjoyed watching it. Please do share your feedback, and also in case you have any queries about stocks, please do write into us.
Yes, and guys, as usual, keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again tomorrow morning at 9 a.m. Till then, have a great day.